My name is Martin, and this is my take on this. Today we're watching a video from Stephan. He's a pretty well-known YouTuber in the financial world. I kind of watch him for many years now. When he just had six, 700,000 followers. I think he has now over like 5 million or so. So he's well known and respected. So nevertheless, he came out with a video just the other day where he says he lost $1 million. So just to put this in perspective though, I would assume that his net worth is at least around between 10 and 20 million dollars. So yes, losing $1 million over a period of time is bad, but it might only be between 5 and 10% of his overall net worth, which then, is not that bad. But nevertheless, it's nice that he's honest about it and tells us how he actually did those mistakes, why he did those mistakes, and telling us not to do the same mistakes as he did. All right, so let's get into the video.
So I f***ed up. Recently, you might have seen a clip of me titled, "I lost huge money on Robinhood," which wound up getting over 11 million views. And I hate to say it, but looking back, that entire clip aged horribly. In fact, watching that has caused me to look back throughout my other financial mishaps to the point where if I could talk about them openly and help one person not make those same mistakes that I made, this video will be 100% worth it. Seriously, in a way, it's cost me about $1 million just to sit here and make this video. So hopefully I could help you avoid the same fate. Anyway, let's start with my first mistake, and that would be the stock market. Here's the thing. Prior to 2020, I mostly just invested in real estate. But when COVID hit and I saw everything falling 50 to 80%, I believe that that would be a pretty good time to buy into areas like airlines, hotels, restaurants, oil, and so on, thinking that we don't usually get this big of a discount, so I bought in pretty heavy. But to my disbelief, within the first few months, those initial stock picks had increased 50 to 100% in value. And in 2021, I saw Robinhood IPO. And at that time, my thought process was, geez, this seems like a pretty good deal with all the money flowing into the market. So I plunked down about $150,000 at $35 a share. And then shortly afterwards, in 2022, everything came crashing down. So when it hit $20 a share, I bought 2,500 more shares. When it hit $10 a share, I went and bought more shares. But despite me really liking the company, the stock price just kept going down. And by mid-2022, I made the decision to sell all of my individual stocks for the sake of simplifying down into 3 index funds, and that's it. And that also meant that all of my Robinhood stock was sold for about a 50% loss. Yep, in terms of how that's played out, it's now trading for almost $100 a share. And had I just held, I would have been up more than 250%. Even though I've certainly had other stocks do incredibly well, when you balance everything out between all the winners and the losers, I would have been financially better off just buying into index funds, and that's it. Although the next loss is something I never could have predicted, and that would be the...
Well, so yeah, that obviously is always kind of an issue if you invest in single stocks. They might go up, might go down. You really don't know. I personally invest in Robinhood, and so far I'm quite happy with it. He should have kind of stayed in it just because knowing that it kind of will grow over a long period of time. So when you invest in the stocks, and he knows that, he always says that, you're in there for the long run, right? Robinhood is they're diversifying in so many areas. They're going international. They're in the crypto market now, and so on. So they actually have a huge upside potential compared to standard investment companies. So I personally think it's actually just a start. Even the $100 that they're at right now, or around that area, I think they actually have the possibility to, be way higher than that. So he should have just hold on to that. But all right, it's an honest mistake. It's not really a mistake, to be fair. It's something that a lot of traders or investors do, and it just happens. There's nothing you can do about it. It just happens. But yeah, he could have made way more money with it.
Tesla Roadster. In 2022, I made the decision to sell off my Tesla stock at $314 a share to buy a 1 of 26 yellow Tesla Roadster with 27,000 miles on the clock. To me, everything about this transaction just made sense. I could use my Robinhood losses to offset my Tesla profits, use those Tesla profits to buy a Tesla Roadster, and my bet long-term is that the value of the car would outpace the value of the stock. After all, the Tesla Roadster was the first car from Tesla. It popularized the electric vehicle. It's the only car to be floating around in space. There's estimated to be less than 1,500 of these remaining, and yellow is the rarest factory color. So I thought to myself, the Tesla Roadster has to be a future classic car that's going to be worth a ton of money one day, right? Wrong. Within a few months of buying the car, Elon Musk purchased Twitter. He became a little controversial, and all of a sudden, a glut of Tesla Roadsters started flooding the market. I hate to say it, but I've lost, at minimum, $30,000 on this car.
Well, there's even another point to that. Despite being a Tesla or not, the problem in general, I think, that's my personal view, with electric cars is there's not really any value on, like with all the old cars that are around, vintage cars and historic cars and so on, that are quite up in value at some point. An electric car, for some reason, just doesn't have that appeal to it, that it will go up in the future. For some reason, it just, it kind of looks like an electric car is kind of like, a remote controlled car type of thing. It's just an electric motor and a chassis around it. So it doesn't have that appeal to actually go up in value. Even if you take a Rimac Nevera, which is, $1 million car, I don't think that car will be, will go up in value. I just don't think that.
Here's something that will apply to everybody, and that would be paying taxes. In 2014, I started working with a new CPA who seemed pretty diligent and well-priced. Like, she'd help me optimize my income, structure LLCs, tell me different ways that I could save. She handled my taxes. At the very beginning, everything was fine. Although, as I started earning a little bit more money and doing YouTube videos, I started to get the sense that she didn't actually know what she was doing. But until that point, nothing had gone wrong, so I continued. And then 2020 hit. In 2020, she recommended that I get a 6-month extension to give her more time to file my taxes. So I went and asked her, okay, that's totally fine. How much do I have to pay the IRS? To which she said, oh, don't worry, you're all caught up. You're not going to have to pay again until the end of the year. So I trusted her. I just let it be, and I continued on making YouTube videos. Until about 12 months later, when I got a bill from the IRS and the state of California for an $80,000 underpayment penalty in my taxes.
Yeah, well, that's a tough one. There's not really much you can do about that, to be honest. Tax laws are really very complicated. And to really know what's going on, that's not really that simple. Even though, you kind of have to trust your accountant, there's just no other way. Maybe just don't opt for the cheapest option. Just see that you actually get a reputable accountant or accountant firm that is doing your taxes, especially when you already earn like in the $1 million range. So then, saving a couple of thousand on an accountant doesn't really do much. So you much rather just pay and make sure that everything is set right. One thing I have to say though, as I said, I told at the beginning that I know where he lives. I actually found out pretty simple by just searching the Las Vegas registry for houses, and I was actually surprised that his house is not owned by a company but by himself, which to me is kind of, to be honest, is kind of a no-no, I would say, in his position. He could much rather have this house bought by a trust and then pay rent into it and so on. So that would make him saving quite a lot of in taxes. But well, that's his decision, not mine, and it's perfectly fine. There's nothing wrong with it. I just found it quite interesting that a person of his caliber bought the house under his own name. That kind of was interesting to me.
Accountants. He caught that she didn't file the proper election on my corporation, essentially meaning that I would be double taxed on 2 years' worth of income. Thankfully, we barely made the cutoff for all of that to be reversed and file the proper elections. But my gosh, lesson learned. That's why when it comes to your taxes, Don't cheap out. Get the best person you can. Get a second opinion if it's necessary. Make sure you're paid up to date. And if errors do happen, because we're all human, just make sure they're corrected or amended as fast as possible. Losing Bitcoin. Look, I've made well over 1,000 videos on this channel since 2016. And over that time, I've tried almost every single investment platform in existence because one, I enjoy trying them out. And two, when I talk about something, it helps to have actually used it myself. But when it comes to cryptocurrency, unfortunately, I've lost way more than I would like to admit. See, for the last 8 years, I've been buying a small amount of Bitcoin and Ethereum on a regular basis, and over time, that grew to like 2 to 3% of my portfolio. At first, I didn't think much of it, but over time, I thought that it would be a good idea to spread it out throughout various exchanges just to be able to see what they were like and see if I enjoyed them. But unfortunately, a few of those exchanges ended up going bankrupt, and in the process, I lost about 3 Bitcoin and just over 50 Ethereum that got frozen. Now, on the bright side, if you could call it that, the price of Bitcoin back then, at that time, was about $20,000. I invested an amount that I was okay risking, and that was only a portion of my Bitcoin and Ethereum. But regardless, when I see the price today and I see how much all of that could have been worth, it stings to know just how easily this all could have been prevented by sticking with the phrase, not your keys, not your coins, which is something I've repeated on the channel for years and willingly chose not to follow because I thought I was playing it safe by spreading out my money throughout various places. Separate from that, this is also the reason why, more recently, I've just stuck to buying a Bitcoin ETF, and that way I don't have to worry about personal.
Yeah, so the phrase that he said there is that you actually should have your cryptocurrencies on your personal wallet, on a hardware wallet that you can take with you, or safe lock somewhere in your house to make sure it's not lost, because everything that's out on a server somewhere, I will not say can be stolen, but at some point it could be that trading platform goes bust and everything is lost. So yeah, it is kind of an issue, and I personally went into the same issue years ago, like 5-6 years ago, when crypto was like all the rage, and I tried out several different platforms and things like that. And yes, I personally lost some money there too. It's kind of a learning curve. I personally thought that Bitcoin will kind of revolutionize the money transfers, which, to be honest, it didn't. It made it actually way more complicated. So overall, I'm not too much into cryptocurrencies at this time, but that's everybody's own opinion. But yeah, it can happen that if you don't do it right, that you can lose quite a bit of money in the cryptocurrency space, either by losing your wallet, or by that one of these platforms goes down, or that it might get stolen somehow. So it's a little bit of a hit and miss when it comes to that. And so yeah, he goes the safe route by just buying into Bitcoin ETFs, which is, I think a pretty good idea. It just makes it simple. It's so much easier, to be honest, to buy stocks than to buy any cryptocurrency.
Custody, I don't have to worry about any security leaks, and if anything happens, I'm blaming BlackRock. Although speaking of things I haven't really talked about before, my next one is the biggest loss that I have taken on something, and that would be a failed business. A few years ago, it just seemed like everyone in the YouTube space was diversifying outside of content. You had Alex Ramosi, Alex Becker, Max Tuning, Nelk, Mr. Beast, Logan Paul. It was everywhere. So I thought, building a business is the way to go. In fact, almost serendipitously, someone reached out at the exact same time that I was thinking about doing this, and we talked it through. The timing seemed right, I liked the concept, and it seemed like a win-win. I could focus my time making YouTube videos, and they would handle all of the back end, because I didn't have the time or interest in doing that. At first, all of it seemed great, but over time, I started to get the impression that maybe some things were being rushed. Perhaps we had to adjust our...
Yeah, that's a very, very, very good point. Well, first of all, he actually has a business. His YouTube channel is a business. And so it's not that he has, no business. But I understand, as soon as you partner with other people, it is tough, because they might not actually do it the way you want it or you think is right. And so you kind of often just hanging in there and hoping, for the best. And I remember he had a couple of businesses, I think, that he talked about on his channels. One was a bank. The other one was like investing in apartment complexes with another YouTuber in Vegas. And he also had his coffee, which I think he shut down a couple of months ago. I think it was called Bankroll Coffee, because as you see in this video right there, there's the glass standing on the left side of him, and that's his signature. To be honest, his iced coffee. That's why his microphone said iced coffee hour for another show he has. And so he says, why buy a latte or whatever at Starbucks for $5 if you can make the same thing at home for 20 cents, which obviously is true, right? And so, yeah, he had all these businesses, but to be fair, you have to try, these businesses. If you don't try it, you would never know if it would have succeeded. So yes, he might have lost quite a lot of money with that, and I did too in the past, but other businesses, they went well and I made money with them. So it's not that you just say, oh, I don't do businesses, I just invest in the stock market. Yeah, that's kind of foolish, because if a business really hits off, it can be way more profitable than any stock out there. So yes, I'm sorry for him that he lost some money with it, but I think we have to be entrepreneurial and follow the idea of opening businesses. I think that's an important thing.
Expectations, or possibly move a little bit slower. And at that point, I just wanted to take a pause on the whole thing. But I also thought to myself, Graham, you're such a control freak. Why do you have to micromanage everybody? Just delegate and trust the people who you trust. So I let it be. However, not even 6 months later, it became very apparent that both of us had very different expectations from what we wanted and what we expected from the future. So by the time we amicably cut ties, I was out about $250,000, all because I wasn't happy and totally satisfied with the direction it was heading. That one was a very difficult chapter to close, but you know what? I kept my word to the other person. There are zero hard feelings. I blame myself for not being as involved as I should have been, and I did what I thought was best for the future because I didn't want to be tied to something I didn't wholeheartedly believe in and want to stand behind. Ultimately, this taught me that unless you're actively involved in every aspect of the business and see it through 100% from start to finish, it's not worth pursuing. Ever since that point, I've only worked within the opportunities that I'm willing to give 100%.
Yeah, he's absolutely right. You have to give 100% or more if you pursue your business. There's no other way around it. You cannot just say do it on the sideline or let somebody else do it and just hope for the best. That's not going to work. You have to do it 100%. No matter what it is, you have to do it 100%.
100% of my attention to. But unfortunately, that means it was also too late for some other investments that I made in the past, like with private equity. Now, maybe it's still too early to tell how all of this is going to play out, but so far, angel investing in startup companies has been one of the biggest regrets. Like, here's the thing. In my email, I get about a dozen requests every single month from people wanting me to invest in their businesses, and in the very beginning, a few of those looked very promising, so I figured I'm going to invest in some of these and give it a shot. However, it's important to keep in mind that unlike publicly traded companies, startup investments are completely illiquid. You have no control over how that company is run, and unless they get bought out by a bigger company or they IPO, you're stuck in it whether you like it or not. Well, in the beginning of my private equity journey, I invested in just over a dozen startup companies that I thought had a lot of potential. But looking back, I would have been so much better off just sticking to buy and hold boring index funds. Even worse, I've tried cashing out of a few of these just to be able to take the loss and move on, but I'm locked up. And of the one I could possibly sell, I'd have to take about a 60% loss on it to sell it on the private market, which at that point, I may as well just hang on to it to see what happens. Now, of course, in fairness, this is just the nature of private equity. About 90% of startup businesses.
Yeah, that's just how it goes. I said in my other channel that I myself had a couple of businesses and some of them I had investors and so on. That's just how it goes. You never really know if that business will be successful or not. And it cannot be. And that's the risk of private equity when you are an investor in a new startup. It's like at least 90, 95 or even more percent of these go bust and you will not make anything out of it. That's just how it goes, But yes, at least he tried, Yeah, he could have just invested in a boring index fund. But overall, I think it's important that there are people out there that actually do invest, that take the risk to invest. Otherwise, things would not move forward. And so I actually think it was good that he did that, even though he lost money with it. That's just the nature of the beast. So I think, yeah, that's just how it goes.
Fail, and sometimes you only have one home run that makes up for all the other 20 losers. But if I could go back and do it all over again, I would just be sticking with boring, basic index funds. I would be so much better off. I wish I could, but you know what? Lesson learned.
Yes, so that was a quite good video from Graham showing his personal odyssey, let's say, in his investment financial strategies. And as I said during the video a couple of times, is you have to take those risks. You have to invest in businesses. You have to open businesses. You have to do those things. Yes, you 90%, 95% will lose money with it. That's just how it goes. But if you've never tried it, you would never know if it could have been successful. You know, you would sit in the chair when you're like 70, 80 years old and think, why didn't I do that? Maybe it would have been good. Maybe you see somebody else who did it and they succeeded. They're rich or whatever, and you're not. So you have to take those risks. That's just how it goes. And so I think pretty much everything he said. I don't think that what he said that you should play it safe just because of that. Because as I said, you would lose out on many things that might be actually way more important than having a bit more money. At the end, yes, he might have lost 5%, maybe 10% of his net worth, maybe even less than that. But over the period of time, also think about you can write off things with taxes and so on. So it might not have actually have been that much that he lost with it. So I think you have to take those risks, as I mentioned many times before. You just never know if it could have been successful or not. So yeah, that's it for today. Great video from Graham Stephan. The original video I'll link down below. And please like and subscribe. There will be more videos like that in the future. Alrighty, bye.